Hi everyone, welcome to Condo Academy. This is episode 5. We're calling this one the Condo I.P.O, or Secrets of Condo Launch Investing. My name is Giovanni Marsico, and along with my partners Susan Tuglian, Roy Bhandari, and Amit Bhandari, we're considered 4 of Toronto's top platinum agents, and platinum is in quotations, which means I'll explain the word in a few minutes. We are sales representatives with Sotheby's International Realty Canada. And today is Tuesday, so it's FAQs Day Tuesday, where we answer all the best condo investment questions we receive from our viewers. So if you have a great question, please email us at info@condoacademy.ca. For this episode, we're going to focus on the buying process, or what we call the starting line in a condo investment. And the questions are: how does a condo launch work? What do VIP and platinum mean when it comes to buying condos? Is it better to buy pre-construction at the start of a new project or near the end when the building is completed? What's the best ROI neighborhood in Toronto right now? What are the advantages of buying pre-construction if the prices are the same as resale? And do I need to be represented by a real estate agent to purchase a pre-construction condo? So I'd like to thank all of our viewers who submitted these questions. And before we begin, I'd like to talk about what to expect for next week, since we're going to feature or focus on selling, or the finish line. So what is a condo assignment and how does it work? Is it better to rent out the suite or sell? Is it better to flip before closing or sell after closing? Can you make positive cash flow on rent? That is a question that comes up a lot. And when is the best time to sell overall? So getting back to this week, we're calling it the Condo I.P.O. That's actually a term that we've developed, and we're going to introduce you to the whole concept of a condo launch. So what is a condo I.P.O? Well, in the stock market, IPO means initial public offering. It's the first sale of stock by a private company to the public. And the reason a company has an IPO is to raise capital for future growth and create exposure for the business. Now, in the condo world, we also have IPOs, or new condo project launches, for the same reasons. Developers need to pre-sell, as we mentioned in previous episodes, around 70% of units in a new project before they can receive construction financing. So they have this IPO process to reach those milestones. And what are the stages of an IPO? Well, I'm about to show you what we consider an aggregate or average of the industry. But keep in mind, every developer is different, every development is different. And sometimes developers will use this model, sometimes they will use different models, which I'll explain in a second. But typically, at the start, once prices and floor plans have been finalized and a developer is ready to begin sales, they may or may not have what's called a friends and family event, which is a small event for their friends and family and people in the industry who have helped with the project. It could be architects, it could be construction crews, and they may sell a very small percentage of units. Typically around the same time, they will open to what's called platinum agents. And a platinum agent, there is no real industry definition, but the way we define it is someone who has sold multiple or high volume of units for multiple developers. So not just for one developer, but many developers. And multiple can mean 10, 20, 50, 100 units. The platinum stage is typically the first time an investor can invest in a project if they are not related to the developer. And it can take 2 to 4 weeks. Once that stage is done, the developer will open to what's called VIP agents. And to give you some rough guidelines, a typical project might have 15 to 20 platinum agents and 200 to 300 VIP agents. And a VIP agent is someone who has sold multiple units for one specific developer in the past. So they've built a relationship with this one developer. Now, in this chart, we're showing prices increasing. They may or may not increase during these phases. Quite often they do. And Some developers may just open sales to all agents across the board. This happens quite often, but they may give priority to specific agents who have better relationships or who have sold more in the past. Once the VIP stage is done, the developer will open the doors to any agents in the community to bring in their buyers. But you have to keep in mind that during this entire time, an individual buyer or investor cannot walk in off the street to make a purchase. Quite often, the sales centers or presentation centers aren't even finished yet. So these sales are happening off-site. At this point, the developer will open doors to people who have pre-registered on the developer's website. So if they're launching a project called ABC Condos, they will have a website called abccondos.com where they don't provide information about the project other than a page to register. So a buyer can register and then they will have first access for buyers. And once that stage is complete, the developer will typically have a grand opening for anyone to walk in off the street and make a purchase. Like I said, every development is different, every developer is different, and sometimes the agent community might sell 70-80% of a building. Sometimes they may sell 30 to 40%, sometimes it's 100%. So every time there's a new launch, it's a little bit different. This is more of a model to give you a rough idea of what happens. Once the developer reaches that 70% mark, they can start construction. And once construction is completed, that phase is called occupancy, when people start to move in. And that is the last wave of sales for the developer to the public. We call this process developer-driven appreciation. So why does this happen? Well, to receive construction financing, like we mentioned, a developer has to reach that 70% mark in terms of number of units sold in the project. In a building with 300 units, that's 210 units that have to be pre-sold before they can start construction. And as we mentioned in previous episodes, end users, or people who want to purchase to live in the suite, don't typically invest until close to the end of construction for two reasons. One, they don't want to wait 5 years to move into their new home. And two, they want to see what they're buying. They want to walk through the physical space. So developers will provide better pricing and incentives to the broker and agent community so that they can reach those sales milestones and so that they can attract great investors. So what is the best time to invest in a pre-construction condo project? Well, we found that there are two great times to invest. The first being as soon as possible, meaning as soon as the developer releases sales for sale. It could be the friends and family stage or platinum stage, depending on how the developer launches the project, but as soon as possible. And that's because you will receive the lowest possible pricing and first choice of suite selection. This is important because in any given condo project, some models or suites or floor plans may be better than others in terms of design, and some may be positioned with better exposure or views than others. So the earlier you can purchase, the better you have access to the best possible suites. However, there's another great time to invest, and that's right before construction, meaning right before the developer receives construction financing. When they're close to that point, and they may have 15, 20 units left, they will probably offer great incentives and discounts so they can get past that point. Oftentimes, a developer will be access to sell higher floors, or they may receive, access to build 5 to 10 extra floors in the building, and they will release these new suites at that time. There's also a big secret in our world that we call inventory deals. So what is an inventory deal? Well, close to or directly after receiving construction financing, many platinum agents can negotiate bulk deals with developers to receive great incentives that you typically couldn't receive if you're purchasing one unit by itself. So these incentives could include better deposit structures, free maintenance, guaranteed rent, cash discounts, and a lot more. And to have access to these type of deals, the agent usually has to have a strong relationship with the developer and guarantee a certain number of deals. A developer will probably not negotiate on 1 or 2 sales, but may negotiate on 10, 20, or 30. And keep in mind, this is not to one investor, because most developers will not sell more than 1 or 2 units to one individual. So one of the questions we received are, what are the best ROI neighborhoods? Well, you have to ask yourself the following questions. Where will demand for sales or rentals be strongest in the worst economic conditions? It is very easy to sell or to rent out a suite when there's a lot of demand, a lot of upswing. But when things turn, and it will turn, there will be cycles in the market, where will there still be demand when the market's not doing well? Where will the growth be in 5 to 10 years? When you buy pre-construction, you're not buying for today, you're buying for tomorrow. It's like a futures contract. So you can't base it on what's happening today. You have to figure out what's happening in 5 to 10 years. You also have to look at the commercial market. Where are the head offices being built? Where's the commercial growth? Because people want to live close to work. And as the population grows, as density grows, and traffic becomes more and more of a nightmare, people will want to stay close to work. You also have to look at what's happening in the city in terms of development. So where are the major government revitalization projects? And what areas will have the most positive media attention in the future? So here are some ideas for you. Historically, if you're close to the lake or transit, you're doing well. And by transit, we typically mean subway stations. So if you have an investment property close to a subway station or within walking distance, that's usually a safe bet. It's also a safe bet if you're within walking distance to a university or college. We love revitalization projects, and some examples are Regent Park, West Don Lands, East Bayfront, and the Portlands, because there's a ton of development. And at the start of these projects, you really need to have vision to see what will happen in 5 to 10 years. But it's a great opportunity for an investor. Another great opportunity is what's called multi-phase developments, such as City Place, Water Park City, where historically we've seen higher than normal appreciation levels. If your building has access to the underground path system or direct access to a subway station, that's always a bonus. And if you're close to any new commercial, so that people have walking distance to work. And one example would be what's being labeled the South Financial Core at Front and York downtown, where it's the site of the new RBC headquarters. And then finally, there's a website called walkscore.com, where you type in a specific address and it will provide a score called the walk score, 100 being a perfect walk score. And the closer you are to 100, it means that you are within walking distance to every possible amenity that you can need. For example, banking, grocery, restaurants, entertainment. And then the last question was pre-sale versus resale, or pre-construction versus resale. So here are some advantages of buying pre-construction versus resale. The first is developer-driven appreciation that we mentioned earlier. The second is that you can leverage your investment. And when you buy pre-construction, if the unit is $300,000, you're asked to put a 20% or 25% deposit. Let's say it's 20%, which is $60,000. That's your actual equity or your investment. And as the unit appreciates based on that $300,000, the compound appreciation on your equity is a lot greater, where oftentimes you can double that equity. So if you're investing $60,000, within 4 to 5 years, you can see it reach $120,000 in terms of equity. You also have no management headaches because you don't have to rent out the suite. There's no mortgage yet. There's no taxes. Now, in 5 years, if you buy today, your unit is completely brand new and you've seen that appreciation, but other resale units have aged 5 years, which could also mean that maintenance fees have increased. If you're buying brand new, you take advantage of technology. So the latest construction practices, which means your unit can be more energy efficient. You also have better and improved finishes and amenities, since developers constantly strive to improve what they're offering. And you also have the benefit of the Tarion new home warranty, so you're protected against deficiencies. So that's it for this week's episode. I hope you enjoyed it. If you did, please share on Facebook and Twitter, and if you have comments, we would love to see your comments below. As well, as I mentioned earlier, if you have condo investment questions, please send them to info@condoacademy.ca. And if you're actually thinking of investing or want the latest news and gossip, please visit us at talkcondo.com and join our Insiders Club.